This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
The magic of Macy's disappeared just a bit in the first quarter. Sales were soft, but management is optimistic. Is CEO Lundgren right, or is the consumer pulling back?
Cisco Kid, earnings and revenue top expectations, and the stock initially takes off. Could this Dow component be setting the tone for tomorrow?
Taking a toll. President Obama says hundreds of thousands of jobs are at risk if Congress lets the Highway Trust Fund run dry, halting projects to rebuild roads and bridges across the country. All that and more tonight on Nightly Business Report for Wednesday, May 14th. Good evening, everyone, and welcome. I'm Tyler Matheson.
I'm Sue Herrera, filling in tonight for Susie Garrett. Well, there were no records set on Wall Street today as investors did a little profit-taking and sold out of stocks. We'll have more on that in a moment. But we begin tonight with Macy's, the nation's biggest department store chain and an anchor in malls from coast to coast and a shopping staple for most Americans for generations. Shares of the chain ended just a hair lower today after reporting sales fell short of forecasts last quarter due to all that brittle and brutal winter weather and a slow start to spring, even though profits were slightly higher. Courtney Reagan has more on Macy's last quarter results and how confident the retailer is about business in the months ahead.
Macy's turning in a first quarter a little less magical than previous quarters. The department store posting an increase in profit, but disappointing sales. Macy says colder weather and the shift in timing of its friends and family sale had a material impact on the quarter. But on a conference call, the retailer's chief financial officer said year-to-date, sales are already back well into positive territory. And Macy's believes underlying consumer demand is strong enough to reiterate its earnings forecast. The retailer is also increasing its dividend and stock buyback program. Wells Fargo analyst Paul Lejeune says it's not Macy's best quarter, but it's good enough. Many on Wall Street consider Macy's to be one of the strongest retailers. So today's lackluster results have some worried about what competitors like JCPenney and discounter Walmart will report when earnings are released tomorrow.
You're seeing a choppy backdrop. You're seeing a consumer that last year was hit by a 2% payroll tax. This year has the uncertainty around health care. So I think you're seeing some shifts taking place between, home improvement as well as apparel.
Home was the weakest category in the quarter for Macy's. The company saying the weakness may be related to fewer housing starts and lower new home sales, though said the trend has improved in early May. It's the improving trends that has Wall Street giving Macy's a pass, at least for now. For Nightly Business Report, I'm Courtney Reagan.
Well, Macy's isn't the only retailer reporting this week. Both Walmart and JCPenney are set to report their first quarter results tomorrow. Bert Flickinger is managing director at Strategic Resource Group, and he joins us now to talk more about his expectations for these retailers. Let's start, though, with a little wrap-up on Macy's, if you don't mind. It has been a darling of Wall Street. Everybody loves Terry Lundgren, deservedly so. Are they going to be able to meet their goals for the rest of the year? Are they sort of best of breed in this space?
Macy's is best of breed, along with Macy's.com. So Macy's is shifting customers from Target, from Penny, from every Bon-Ton, every major retailer in mid-tier, specialty and department stores. So Macy's will continue to win while the rest of retail is really a big cause for concern.
You know, I was surprised with some of the results in the retail space, mostly because there was so much discounting. But that didn't seem to resonate with consumers this time around. Why?
So to your point, it's been desperation discounting now for 7 straight months through the 21 wild winter storms that we had. The consumer's immune to discounting, and the consumer's using his or her mobile devices to find better price points. So they're forcing, they're outsmarting the stores and forcing the stores to sell at even lower profit margins than before.
How much did the Target data breach affect consumers? Because it seems like they want to use more cash than they do debit and credit these days.
So you're completely correct. Consumers are moving much more to cash, less to debit, much less to on and offline credit. Target's being hurt the worst, but it's affecting all retailers, particularly apparel and jewelry and accessory retailers that are most dependent on credit.
Let's pivot to what you think or expect from Walmart tomorrow. And I'm going to pick up on the point that you just made, which is, could Target's pain with that data breach be Walmart's gain?
Target's pain is definitely Walmart's gain. Walmart's same-store sales have been negative for over a year. So now you have Walmex and Walmart DeMeco has already reported declining revenue, marginal same-store sales. Walmart U.S., the same-store sales won't be good, but the forecast will be much better than what people expect for two reasons. One, the gain at Target's pain. Two, Coca-Cola with the World Cup coming. 6,000 Walmart stores wired with a proprietary Coca-Cola partnership for every World Cup match that 1 billion viewers will see around in every country, every continent.
You know, we also have the fact that Walmart is moving into less traditional and more niche areas, such as we saw that in the Whole Foods report earlier this week. Walmart's offering more organic, more locally grown, and that's really taking the steam out of some of the niche players in the food business.
Great point. When you look at Whole Foods down 20% in a day, Sprouts, Fresh Market down 20% or more, 40% for the year. With Walmart going shelf stable, with Wild Oats brand, bringing it in for natural and organic, and the fresh that you referenced, advantage Walmart, disadvantage to the organic and fresh retailers.
Let's get to two retailers that have had their share of troubles quickly, JCPenney and Sears. How's JCPenney going to do when they come out with their numbers, and finally, is Sears going to survive?
Sears may not survive because it won't get a big enough number for Sears Canada that's reportedly up for sale. As Courtney Reagan referenced a few minutes ago, home was a difficult area for Macy's.
Right.
Penny, to save itself, has to win on home. If Penny can't win on home, it can't win, and it may have to reorganize in a bankruptcy reorg sometime in 2015.
Very interesting, Bert. Fascinating stuff. Stores we all know and use. Bert Flickinger, thank you.
Appreciate teaming up with Tyler.
You bet.
All right, well, Ty mentioned Sears, and that other major retailer was indeed making news today. Sears, the troubled chain, is considering selling off its 51% ownership stake in Sears Canada. Sales at its stores in the Great White North have been declining for years, and it recently closed down some unprofitable locations. Investors were not impressed. Shares of Sears Holding Corporation, which also owns Kmart, that discount chain, fell nearly 6% today.
Earnings after the bell from the computer networking equipment giant Cisco, and the results were better than expected despite sluggish demand for hardware. Cisco made 51 cents a share in the third quarter. That topped estimates of 48 cents, excluding accounting items. Revenue also beat expectations at $11.5 billion. That was down from more than $12 billion a year ago, but it beat the expectation. Shares initially higher in after-hours trading. Sheila Dharmarajan joins us now from the NASDAQ exchange with more on Cisco's results. Sheila, we always like to ask, what's the big takeaway you see in these numbers?
Well, Tyler, if there's one takeaway from the Cisco earnings report, is that Cisco's business may finally be turning the corner. So the company has reported several weak quarters, but this one was definitely better than expected. And importantly, the company said that the guidance for the current quarter, which is Cisco's fiscal fourth quarter, would be much better than expected. In fact, Cisco said they only expect revenue decline between 1% and 3%, which is far better than the negative 5% that Wall Street had been expecting. So a lot of positive news coming about the traction of Cisco's business. CEO John Chambers particularly talking about some impressive growth rates when it comes to their high-end routers. So perhaps some good signs ahead for Cisco.
Sheila, thank you very much. Sheila Dharmarajan at NASDAQ tonight.
As we told you at the top of the show, there was a big sell-off in the markets today, especially for small-cap stocks, as the Dow and the S&P retreated from yesterday's record highs. Those blue-chip Dow stocks ended lower for the first time in 6 sessions, falling 101 points today. The Nasdaq was down 29, and the S&P was lower by about 9. Another factor giving traders the jitters today, a spike in inflation, as the producer price index for April rose by a more than forecast 0.6%. Part of the reason for that increase, a new and more accurate way for the government to track wholesale prices and which parts of the economy are most affected. Steve Leisman explains.
Once upon a time, America was a manufacturing powerhouse. About 1 of every 3 American jobs was on the factory floor. But beginning sometime around the end of the Korean War, services began to take over. Now, just 1 in every 10 Americans is in manufacturing. Yet the government for a long time stuck to the old ways of measuring the old economy. That's slowly changing. This year, the government revamped its wholesale inflation indicator to take account far more of the service sector. In fact, the index once only covered about 35% of activity. Now it's near 75% and should do a much better job of pinpointing inflationary pressures. And there do seem to be some now. The 2 times the index has been published, including today, it's shown inflation well above expectations. That's made former Fed Chair Alan Greenspan nervous.
Now, I'm not forecasting inflation is about to run. I doubt it very much. But the presumption that it's no longer on the horizon, I think, is a mistake.
Now, to be sure, these are producer prices, and they often don't get passed along one for one to consumers. But if inflation is going to start, it's likely to be picked up first in wholesale prices, maybe especially now that it covers more of the U.S. economy. For Nightly Business Report, I'm Steve Leisman.
President Obama is looking to keep a campaign promise, pushing legislation to raise more money to repair the nation's crumbling infrastructure. But it won't be easy. Much-needed repairs to roads, bridges, and tunnels may mean higher federal taxes and tolls. Hampton Pearson has more.
Hello, New York!
President Obama chose the construction site of the new Tappan Zee Bridge, a major crossing point over the Hudson River, getting a multi-billion-dollar overhaul to dramatize that America's transportation infrastructure is falling apart and the federal government is running out of money to fix the problem.
America doesn't stand still. There's work to be done. There are workers ready to do it. And not just rebuild one bridge, but I want us to rebuild every bridge.
A few hundred miles away, Vice President Joe Biden in Cleveland, making a pitch for new mass transit spending to boost the economy.
America remains the most dominant economic force in the world, and will continue to be the most dominant economic force if we invest in the future, if we invest in infrastructure.
2 separate funding crises are on the horizon. The Highway Trust Fund, which finances more than $50 billion a year in major projects, is running out of money, just as cities and states begin the annual repairs that come with warmer weather. The Department of Transportation predicts delays on more than 110,000 projects this summer and the loss of some 700,000 construction jobs in the next year. The chief source of funding, the federal gas tax, now at about 18 cents a gallon, hasn't been raised in more than 20 years, and it's even less likely in an election year.
We're going to have to figure out a way to patch that over the next couple of months to make sure that states aren't losing the billions of dollars that they're expecting, that we're not laying off workers. It's about 11% of the American workforce is somehow in infrastructure.
Meanwhile, the bill that governs all transportation policy expires at the end of September. A bipartisan 6-year plan to maintain current spending levels at about $105 billion per year has just been introduced in the Senate. The Obama White House is pushing a 4-year, $300 billion transportation overhaul to be paid for by gas tax revenues, business tax reform, and more tolls on interstate highways.
The Senate hasn't really talked about what they would use to fund the proposal. So while we have lots of good ideas for what should happen on the federal level when it comes to transportation, the revenues to pay for it is the real sticking point at this time.
With so many moving parts, the infrastructure overhaul will be like traffic in America's cities, subject to frequent stalls along the way. For Nightly Business Report, I'm Hampton Pearson in Washington.
Still ahead, regulators are close to voting on a new controversial plan that could directly impact anyone who surfs the web using a smartphone or tablet.
Quite a scare today for Walmart investors. The price of the stock fell sharply this afternoon, falling by 60 cents in less than 1 second in what's being called a mini flash crash. But then within a minute, the stock rebounded. Nonetheless, shares still closed about 0.5% lower.
A little bit of trouble at the New York Stock Exchange today. Get this, the exchange reported a problem with its data feeds on companies using the ticker symbols D through J. So DuPont, Eaton, General Motors. But it says the bottleneck didn't affect any trading in the shares and the problem was quickly resolved.
The FCC has a big vote coming up tomorrow over how much wireless spectrum the nation's biggest mobile phone companies will be allowed to own and how much should be left over for smaller or future competitors. Morgan Brennan has more on the vote and why it matters to all of us.
When the Federal Communications Commission meets Thursday, it'll vote on proposals that will affect wireless carriers and with them, consumers. The topic, spectrum.
The way to think about this from a bigger picture is spectrum is the lifeblood for a lot of these wireless carriers. It is the connection point from the consumer to the network.
There are different bands of spectrum, and the FCC has a screening process to determine how much and what kind wireless carriers can use. Up for debate is whether to expand those guidelines. But the Commission will take up another vote as well, whether to set aside some of the most sought-after spectrum, low band, that's expected to come to auction next year. Such a proposal would limit the amount that industry giants Verizon and AT&T could purchase, reserving it instead for smaller competitors like Sprint and T-Mobile that could otherwise be outbid.
If you can free up more pipes, the actual cost for the stuff that goes through the pipes could go down. So it is a net benefit to consumers that the FCC frees up this spectrum. The key question is, how do they free it up in a manner that is supportive of a competitive environment?
Low-band spectrum can travel farther distances through walls and other obstacles, and it's used primarily for data plans. As customers increasingly turn to smartphones and tablets for more of their media consumption, especially video streaming, low band becomes more important.
The more spectrum that operators have, the more innovative services and faster speeds that they can offer to consumers.
That's why the details of the FCC's proposal will be especially important. They'll help determine what carriers participate in the 2015 auction and whether the broadcasters that currently own the spectrum think their wireless real estate is worth selling. For Nightly Business Report, I'm Morgan Brennan in Los Angeles.
And to read more about the FCC's vote on spectrum and how it could impact consumers, go to our website, nbr.com.
Deere posted a strong profit, but weak outlook sent shares lower, and that's where we begin tonight's market focus. Earnings and revenue beat estimates as cost cuts helped the company offset lower sales of its tractors and other gear. But Deere lowered its forecast for the full year, saying with farmer income expected to decline, sales of agricultural and turf equipment will fall for the full year. And the stock fell 2% to $91.70. Sony's shares plunged after the electronics giant said it had a quarterly loss of $1.3 billion, hit by costs from selling its PC business. The company also predicts this year it will post its 5th annual loss in 6 years. The CEO and other top executives are returning their bonuses to make up for that rough quarter. The stock tumbled 6.5% to $16.50. Yahoo is buying the mobile messaging app Blink for an undisclosed amount. The application lets users send messages that supposedly self-destruct at a time set by the sender. Blink is shutting down its application in the coming weeks following the acquisition. Shares of Yahoo down a fraction, 34.17 was the close.
Kate Spade saw its first quarter sales grow, driven by a surge in its core namesake brand. The accessory and apparel designer did post a wider loss from continuing operations, but that didn't seem to bother investors. The stock popped 8.5% to $37.60. The New York Times announced that Jill Abramson is unexpectedly leaving the position of executive editor. She will be replaced by the company's managing editor, Dean Baquet. Abramson, who has been the newsroom's leader since 2011, was the first woman to serve in the job. Baquet will be the first African-American to take the position. Shares were down 4.5% to $15.06. And SeaWorld posted a wider than expected loss after the bell. Attendance dropped 13%, causing revenue to fall. The theme park operator blamed the declining traffic on a shift in the timing of Easter and the spring break season, as well as bad weather. Shares were down initially after the report. The stock ended the regular session off by about 2% to $29.34.
It's the biggest democracy on earth, and this week, voters in India will choose a new prime minister. So why should U.S. investors care? Well, that's because the front-runner for the top job is considered to be very business-friendly and willing to open the country even more to more foreign investment. And a lot of U.S. companies are ready to jump right in. Seema Modi has more.
The voting is over in India, and the election results are expected in just 2 days. Estimates are that more than 500 million Indians voted in this pivotal election. India's economy is a key issue. With a huge budget deficit, rising inflation, and rampant corruption, India's growth rate has nearly halved in the past 2 years to just below 5%. Enter Prime Minister candidate Narendra Modi, representing the Bharatiya Janata Party, who has emerged as the frontrunner in the exit polls. Modi has used India's laundry list of problems as ammunition for his campaign, making economic reform his key issue. So far, investors like Modi's message.
I think India is an economic powerhouse already. It's just got the potential to be an even bigger economic powerhouse going forward. A win for the BJP and Mr. Modi becoming Prime Minister should usher in some structural reforms over the next couple of years, and that should get growth going back towards the 7-8% range, which is where India should really be growing at this point.
Many American corporations have exposure to India, including DuPont, Mosaic, American Tower, and Pepsi. And in an effort to capitalize on India's growing middle class, Walmart and Starbucks have been gradually expanding their presence in the country. Experts say pickup in India's economic growth will only be good news for these companies. But be cautioned. Skeptics say Modi may not be able to deliver on the reforms he promises.
Markets are just reacting to what they hope will be a big win by Modi and the BJP. I think they're a bit too optimistic, because I think inevitably Modi will need to be part of a coalition government, and what held back policymaking in the previous government was also the same constraints of coalition politics.
But even if Modi does face initial hurdles as prime minister, the business community believes he'll still be able to do a better job than the incumbent Congress Party, which has been blamed for India's laundry list of problems, including the sharp slowdown in growth. For Nightly Business Report, I'm Seema Modi.
Coming up, baggage fees, little legroom, long lines. It's what happens when you fly these days, but not everyone is complaining. We have the surprising results of a new survey.
Do you hate to fly these days? Well, before you answer, you should know that despite higher ticket prices, long lines, and all those fees you end up paying, a new survey says that airline passenger satisfaction has never been higher, hit an all-time high. J.D. Power's annual North American Airline Satisfaction Study finds that flyers are happier than ever, mostly because of easier check-ins and more in-flight amenities like Wi-Fi. We asked some travelers whether they felt more satisfaction about flying.
I feel as though everything has been running smooth as far as like my flights and everything, as far as leaving at the right time. Sometimes you go through delays, but I mean, it's to be expected.
Ticket prices haven't come down any, but the fees go up.
It's reasonable to assume that people are traveling with luggage. They should just include it in the flight.
Why do I want to pay $75 extra to get my bag here?
I just like to see more legroom on the planes.
And all they want to do is get as many people on the plane as possible. So, yeah, we don't have a high-speed rail system in this country, so we're stuck.
I'm still going to travel. If they increase it, it's one of those things you got to pay it if you want to go somewhere.
For all the gains made by the airlines, J.D. Power says customer satisfaction is still below that of hotels, rental car companies, and other service industries.
And finally tonight, an update on the spring art auction season, which has exploded in its first week, with Christie's auction house in New York City making history last night, selling $750 million worth of contemporary art in one night. So what were last night's big winners, and who was doing all of that buying? Robert Frank has the story.
Last chance, I'm selling it here at $75 million. Yours it is.
It was the best single auction ever for Christie's auction house. Their post-war and contemporary sale pulling in a record $744 million. About a dozen pieces sold for more than $20 million. Buyers went for big paintings that made a statement, and Asian buyers accounted for about half of the top 10 sales, showing that Chinese collectors have become the biggest new force in the soaring art market. The top seller was also the night's big surprise. It was Black Fire by Barnett Newman, which sold for $84 million, including commission. That was way above the estimate of around $50 million and twice the previous auction record for Barnett Newman. While not well known among the broader public, Newman is a big trophy for wealthy collectors.
This is sort of like big game hunting when it comes to abstract expressionist art. If you're collecting Jackson Pollock and Rothko, getting a Newman is like the sort of the white whale of big game hunting.
The second top seller was Francis Bacon's 1984 triptych called 3 Studies for a Portrait of John Edwards. It sold for $80 million, but it was a slight disappointment compared to earlier estimates. A Francis Bacon triptych last fall sold for $142 million, becoming the most expensive piece ever sold at auction. Warhol was a big winner last night. His Race Riot piece from 1964 went for $63 million, and his White Marilyn went for $41 million, double the estimate. And Jeff Koons always brings some playfulness to the auctions, as well as big prices. His 9-foot-long Jim Beam J.B. Turner train, made from stainless steel, went for $38 million. Each of the cars is filled with a fifth of Jim Beam bourbon. So at least if it falls in price, the buyer can always ease his pain with a stiff drink. For Nightly Business Report, I'm Robert Frank.
Well, for $38 million, you might need a stiff drink, right?
That's a dual-purpose piece of art.
It is. Maybe that makes it worth $38 million. I don't know. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everyone. We'll see you back here tomorrow night. I'm Tyler Matheson with a Nightly Business Report news brief. Stocks ended sharply lower today on a sell-off in small-cap companies, and after a report showed that inflation is on the rise, with producer prices up more than 0.5% in April, that because of higher costs for food and services. On Wall Street, the Dow ended lower for the first time in 6 sessions, off 101 points. The Nasdaq was down 29, and the S&P was lower by about 9. Shares of Sears fell nearly 6%, even as the retailer is considering selling its 51% stake in its struggling Sears Canada stores. First quarter profits rose at Macy's, but sales were lower than expected. Still, the chain is raising its dividend and boosting a share buyback plan. Mortgage applications rose last week as rates edged a bit lower. And tune in to Nightly Business Report here on your public television station.